Hey, good evening, folks. Welcome back to the channel. I just can't get enough of this QYLD ETF. They recently paid a dividend on the 29th, yesterday, which is the first dividend that I've gotten from them. And it actually exceeded my expectations. I'm going to show you here because I just bought this in the Roth IRA. And March 29th, it paid off of 210 shares. It paid about a $44 dividend in total, which exceeded my projections because I had it paying $42.42. So by 1 cent per share, it exceeded my projections, which is nice. I mean, this is only $1 and something, but it's always nice to exceed our expectations, right? So that's about 3.8% higher than I expected it to be. So far, I'm really liking this fund just for the objective of paying a dividend. Now, what I want to talk about on this, there's a couple of caveats or quid pro quos to this. This is not recommended as a fund to replace your gains that you would get by holding the Nasdaq. This is more of a hedge against a down market, which we've seen so far this year. We're starting to recover, but I've seen a lot of videos talking about QYLD in a sense that you can do better, which in terms of total return, you absolutely can. I only see this as a dividend play. I'm not looking at like the total performance of the Nasdaq 100 and things like that. This is only a small portion of my portfolio that I'm looking at to generate dividends that I can use to buy other stuff. That's what I like it for. This may not be something that I always hold. It may not even be a long-term investment, but in terms of that 11.8% dividend, which I just showed you, when the fund drops, it's higher in terms of percentage, and it even exceeds that with its extra payouts that it gives at times, which is great. That's the main objective for holding this. But again, it's not something that's going to replace the performance of the Nasdaq 100 because of the covered call strategy. Naturally, when the Nasdaq 100 goes up, if you understand how the strategy works, you're actually, buying and selling options against it, which is going to it's going to cause it to work against you in a sense when the market starts to go up. But in a down market, it's a nice hedge, in my opinion. But so far, it's about flat this year. It started out 22.29 per share. It dropped all the way down to 19.10, and it's had a little bit of a recovery. So it's actually higher than where it was when I bought in. So like I said, overall, I'm very pleased with this fund. And I just wanted to caveat that in that, this isn't something that is a play that's going to replace the performance of the Nasdaq. I think if anybody's looking for that, they're mistaken. Let's look over the Nasdaq performance here real quick. I don't want to search for it that way. I'll just click it. We are seeing a nice recovery, actually, within the past couple of weeks because Jerome Powell, the chairman of the Fed, he didn't raise interest rates as much as expected. He's actually turning out to be very pro Wall Street and very pro stock market if you read his statements, which is a good thing. But the market started really recovering after March 14th, after the interest rate announcement, because the hike in interest rates was only 0.25% or 25 basis points, not the 0.5% or 50 basis points that was expected. So that's driven up a nice appreciation here in the short term for the markets. But in the environment we're in, who knows? Tax increases are being talked about. Inflation is through the roof. Everything's going up. Gas prices. I mean, you see all of the headwinds going on. And to throw in another monkey wrench, let's talk about raising taxes on top of it, right? So, I mean, who knows what the market's going to do at this point. But don't expect, I would say, if you're looking at QYLD again, don't expect it to track like perfectly with the Nasdaq. It's not going to. It's not designed for that. It's more of a hedge against a down market, and it pays a great dividend. So again, looking at the Nasdaq here, we're up about 2,000 points from the low. So, and that's what videos that are critical of QYLD would argue, is that you would miss out on that by being in QYLD, but you're only missing that if you're putting your whole portfolio into that. What's the key tenet of finance, the key tenet of investing, and that we talk about on here? Diversification, right? You don't want to have all your eggs in one basket. So anybody that's buying QYLD for everything, no, that's probably not a good idea. So with that being said, I showed you my dividend there. And yeah, like I said, I think it's a great dividend play, but it's not something to be expected to keep track with the Nasdaq. So if you found that valuable, please remember to like, comment, and subscribe. And I'm going to do another video on the Great Resignation coming up. I'm going to react to a top YouTuber's take on the Great Resignation. And I have some personal emotion and experience on this subject that I'm going to get into on that. So keep an eye out for that. And thanks again, and have a great evening. Take care.